Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here's the current market outlook for KOSS Corporation, stock ticker KOSS. So as we can see here, the stock is starting to stabilize and start to move higher after posting some very important price lows. And this is significant because it does suggest that there could be some potential turnaround activity that's present in this stock. I do understand that many of the people that are trading this stock are currently underwater and their positions are losing money. Possibly these traders were getting into the position somewhere above $10, and now the stock is, for the most part, tended to move lower during that position, during that period of holding the position. So currently, what we need to do in this video is to identify some price levels that will allow people to sort of turn around these trades into the positive direction and to start to turn these trades into profitability. So to do this, we will be looking at some specific price levels that can be used for trading strategies, used to establish trading strategies going forward. So currently, as we can see here, there is a bit of an upside price movement here. Overall, this has not been, the dominant trend that we've been seeing in this stock. There were a few spikes higher, but this really caught people long at somewhat higher levels. Many of these trades, occurred above the $10 mark or even above, maybe above the $18 mark. So there are definitely some positions out there in the market that are currently trading under pressure. So what we have to do to sort of turn this scenario around is to start to look for potential opportunities for upside reversals in the stock. Once this happens, it is then possible to start to, possibly add to the position and get a better average price on the position through dollar cost averaging in order to make it easier to profit on the trade once it starts to make its reversal higher. So currently, what we're looking at would be a series of higher lows that have started to develop as the price is reaching these longer term lows of roughly, let's get an exact number here, roughly 870 to the downside. So this is the critical level to the downside, and it is important here to watch that level specifically because there was some very strange price action that occurred there that is important for traders to understand. So in particular, if we point to this area here, we can see that this really was a false breakout to the downside. We were starting to sort of trend higher, but then we broke through this trend line to the downside and we posted this $8.70 low. For some people, this might have looked discouraging, but what really happened here was that prices quickly started to reverse higher. Not only did they reverse higher, but they also broke above the exponential moving average cluster during that process. That's this series of colorful lines here, yellow, orange, purple, and blue. So this is a bullish signal because it does suggest that, positive momentum is starting to build, even though share prices are trading at long-term lows. So this yellow line here is the 20-period EMA. Orange line is the 50-period EMA. Purple line is the 100-period EMA, and the blue line is the 200-period EMA, exponential moving average. So as we can see here, a downside break like this should not quickly result in moves to the top side that are seen in this way, where you actually break above the exponential moving average cluster. That's not normal. So when you do see this type of activity, you can identify the fact that it is a false breakout to the downside. In addition to this, what follows here is a very strong upsurge in positive trading volumes. So what this means is that buying activity, not only did buying activity start to enter the market, but selling activity started to exit the market. So this is important because it's going to make it much more difficult for short sellers to establish strong positions. People that are buying at these lower levels will be able to capitalize on these upward reversals as they start to unfold, as long as positions are built through dollar cost averaging. So currently to the downside, this 870 level is very important to watch because it is ultimately what resulted in this series of higher lows and this sort of emerging uptrend here. So if we pull out a bit further, what we have to look at next is really this double top resistance zone that comes in overhead. Because if there is a problem that's going to be created, it's going to be created by this level. So in particular, we need to point to this price high here and this price high here. The first price high was established during the July 24 trading session, coming in at 989. And then this followed during the July 26 trading session, where prices did manage to break higher by a little bit, coming in at 990. So that alone is a little bit of a signal about where this is going, because we did not post a lower high in this process. We did manage to minimally exceed this prior price high. So this does suggest that the momentum is positive here rather than negative. Shorter term, we have seen a bit of a decline in the indicator reading. Down at the bottom of the chart is the relative strength index. That's the purple line at the bottom of the chart. And we are seeing that share prices are starting to show some negative momentum. And this has resulted in these price declines here. This really came to a head at the ultimate lows here of 915 before we started to rally higher once again. And the reason that this is significant is because what this did was, even though we saw a bit of downside momentum that was starting to develop, what we really ultimately did see here was a developing uptrend at the top side. This price behavior did it obeyed this trend line and managed to run higher in the process. So what this really tells us ultimately, when we put all of these things together, what we really have to understand here is that the stock has seen some major declines recently. We can keep pulling back on the chart to see those declines. But there's starting to be evidence here of a reversal to the top side. If we continue to see share prices sort of obey this trend line here, we can understand here that the underlying momentum has been positive and should continue to be positive as long as these trading volumes remain bullish. And so far, that has been the case, because we can even point to more recent trading sessions, such as right here, and see that the positive buying activity is outweighing the downsides that are involved with the negative price action. So here's the current market outlook for KOSS Corporation, stock ticker KOSS.